Hey folks, it's Simon here with your Tao Daily edition for Monday, the 19th of August, 2024. Happy Monday to you. The major indices managed to close in the green just barely on Friday, and we've seen a significant V-shaped bottom here in the market. Big steep down, drop, and an equally steep rally. There's an old saying in markets that tops are a process, bottoms are an event. All that means is topping patterns can take a long time to develop, whereas bottoms are generally pretty quick. And that was certainly the case in this one. Now, where things will get interesting is on the next pullback, all right? Because we have had a very decent rally and we've gone up in a straight line. We have not had a pullback. We will get one at some point. The market will not go up forever. All right, there's a big gap here that we'll want to get filled at some stage, and how the market reacts at the next pullback is going to be key. As we want to watch for whether the market pulls back, holds, and then rallies, or whether the market pulls back and then falls to pieces. All right, that's going to be a really important tell as to future direction. Everybody's forgotten about the yen carry trade business as though it was just nothing more than a very short, bad dream. If we have a quick look at dollar yen, this has not really had an impressive rally, and it's starting to head back down. Now, if dollar yen kind of takes out these lows, as it might, we could see a little bit more panic start to come into the market. So just another chart to keep an eye on at this point. The other thing to keep an eye on is yields, all right? So if we have a look at yields, how the market reacts to declining yields is going to be quite telling as to market sentiment, whether we're in bullish sentiment or bearish sentiment. People will determine whether we're in a bull market or bear market by, media definitions of whether we've had a 20% rally off the low or a 20% decline off the highs. Ignore all of that. A bull market is one that rallies on good news and bad news. Right? A bear market is one that sells off on good news and bad news. What has been the typical pattern for the market is when yields decline, stocks respond favorably to that, because declining yields make stocks look more attractive from a valuation perspective, and they make debts easier to roll over and all that sort of good stuff. Now, more recently, we saw yields plunge and stocks fall with them, and the narrative behind that is, well, if yields are falling this much, there must be a recession coming, and recessions are no good for stocks. Now, more recently, we've seen yields start to decline and stocks rally. But keep an eye on this, right? If yields start plunging and stocks don't respond or they even rally, that's very bullish sentiment. If yields start plunging and stocks start selling off again, that is a market that is, again, getting skittish about recession risk. One last thing. If you would like to know how we identified this high and how we made money from it by buying put options right at this sort of spot here, come along to a free event I am hosting this Thursday. All you have to do is head over to www.taoeoftrading.com/volatility. Come along to a free event I'm hosting personally called Making Sense of Market Madness, How I Predict and Profit from Market Volatility. It's a free event, and I will take you through step by step how I navigate through some of this stuff. So hope to see you next Thursday, and I'll catch you on tomorrow's update anyway. Thank you.